In this video, we're looking at accounting for property, plant, and equipment, IAS 16, and it's going to be the part one that this video will focus on. We're starting with the basics. When a business or an entity acquires a non-current asset, this is also known as a fixed asset. Example of this would be a building, a machinery, or a motor vehicle. The key point is this: the economic benefits from that asset are expected to flow to the business over more than one accounting period. Accounting entries for property, plant, and equipment. At this point, we're looking at the initial recognition for the recording of our non-current asset acquisition. And the first illustration that I have here, or the first situation, is when a business has purchased a non-current asset for cash. There's a question here that will be our guide. A business with a year end of 31st December purchased a building for $50,000 cash on 1st January 20x8. It was estimated that the building had a useful economic life of 20 years with a nil scrap value. It is the policy of the business to charge depreciation on a straight line basis. Okay, so we're just going to extract the part that we're going to use to illustrate the initial recognition. So from the question, we know that the business purchased a non-current asset for cash and the value is $50,000. Good. So what are the two accounts that we are going to use for our debit and our credit entries? Good. So now, when you buy a non-current asset, the first thing you need to know, if you have used cash, it means cash must have gone out of the business account. And then in place of that, there's been a non-current asset coming in. So one asset is coming in, which is the non-current assets. And then another asset is going out, which is the cash that you have used to buy the non-current assets. Okay, now making use of T format account now. The first thing I like to tell us about T format account is that the left hand side is always the debit side. So this is going to be our debit side, and then the right hand side is going to be our credit side. Good. All right, so for an asset account, the debit side is always the addition side, and then the credit side records the reduction in our assets. So now in this particular question, the business just acquired a non-current asset, and that addition must come into the non-current asset account. How much is it? Is 50,000. So I'm coming to the addition side, which is the debit side of the non-current asset account. I'm going to record it in there. So 50,000. I cannot leave the account like this. So what means did we use to buy this asset? And then the answer is going to be cash. So we have used cash to buy this asset. Cash is going to be the narration in the non-current assets account. So whoever is studying or looking at this non-current asset account will read it that the business bought or acquired a non-current asset for how much? For $50,000, because that's why it's recorded on the debit side. And then what means did the business use to acquire these non-current assets? the narration is cash. So the business use cash to acquire this asset. Good. Before we leave this account, can I just tell us quickly that when you debit or you credit an account, it is the heading. So it's the heading of the account that is debited or credited, as the case may be. So for instance now, it is wrong to come to the non-current asset account and say cash has been debited. That's wrong. That is not the way to go about it. Instead, you will say the heading, which is the non-current asset account, has been debited with how much? With $50,000. So this is the way we sound. All right. I'm hoping that this is something that is not a problem for us to take in. Okay, that's fine. Now, what about the corresponding credit entry? Well, the corresponding credit entry is the cash. So we'll come to the cash account and have it credited. So in the cash account, you also have the debit and the credit side. So we have debit and credit. And because this is also an asset account, you must remember that this is the positive side and this is the negative side. Good. So what are we going to do now? Well, we want to record an outflow of $50,000 because in your asset account, in your cash account, when cash is coming in, is going to be an inflow which will be recorded on the debit side. If cash is going out, it's going to be an outflow which will be recorded on the credit side. This time around, cash is leaving the business cash accounts, and that's why we'll come to the credit side and record the outflow of $50,000. So we'll come in and put it. So 50,000. And whoever is looking at this cash account would like to know, what did we use this $50,000 to do? And the answer is going to be, we used it to buy an item of non-current assets. Good. So this is how to do the or go about the recording. So we have recorded in the non-current asset account that an item of non-current assets came in. So it's an addition, and that's why it's on the debit side of our non-current asset account. The means of buying it is cash. So we have recorded in the cash account that $50,000 went out of the business account. So if you look at it, this is it. An addition to the non-current asset account, and then a reduction in the value of our cash. So cash went out to the tune of $50,000, and then a non-current asset came in. An item of non-current assets came in. Okay, so there you have it. Fine. We want to see another situation. So what happens if we had purchased the same assets, the same non-current assets on credit? Now, on credit means that we did not pay for the asset immediately. So if we have acquired the assets, still the same value, $50,000 on credit. So what's going to be the initial recognition? What's going to be our accounting entries. What's going to be the double entry? Okay, so this is what will happen. You still have an asset, a non-current asset. So anytime you have an asset in the asset account, there must be a debit entry. So we're going to debit our non-current asset account, property, plant, and equipment with $50,000. Good. Well, this time around, cash will not come in because we have not paid for the assets. So we make use of trade payables. Trade payables is saying that the business has a liability. So on the one hand, the business has an asset of $50,000, non-current assets, and on the other hand, the business is owing, so there's a liability. Okay, and for every liability in the liability account, there must be a credit entry. So if we are to record this, we'll come to our non-current assets and recording there that we have an addition to our non-current assets. So how much is this? $50,000. What means did we use to buy this asset? And the answer is going to be, well, we are owing. We have a liability. That liability is what we refer to as payables. So payables is saying we are owing the supplier. So the supplier is yet to be paid for this asset. Good. So anybody that is reading this account knows that there's been an addition to our non-current assets accounts. We've acquired an item of non-current assets, but the means of acquiring this is through a liability. Good. All right, moving on. The corresponding credit entry is to record that we have a liability. So we must come to the payables account, record the 50,000 on the credit side. Why on the credit side? Because it is a liability. Okay, a quick one. Now, to alter formats, you have the debits to be on the left hand side, and then the credit is going to be on the right hand side. So you have the credit here. Now, unlike the asset account, when you have a liability in the liability account, now the positive side is the credit side. A reduction in your liability in the liability account is going to be on the debit side. So please, I need us to understand this very well. So coming back to the corresponding credit entry, we bought the assets or we acquired the assets on credit. So since we acquired it on credit, we need to come to the liability account, which is payables account, record our liability, which is 50,000, and the question would then be, what must have happened before recording this $50,000 liability? And the answer would be, oh, we're having this liability because we bought or acquired a non-current asset on credit. So the narration is going to be non-current assets. So we have acquired a non-current asset on credit. Good. So that's the way to go about it. Now, the interpretation of this is that we have, on the one hand, a non-current asset. There's been an increase in our non-current assets. Our property, plant, and equipment has been increased, and that's what you have here. So, yes. But on the other hand, there's been a liability. So, we have a liability. And again, for every liability in the liability account, there must be a credit entry. Okay. So that's how to record it. If you have bought or your business has acquired a non-current asset, a fixed asset, by cash and on credit. So the two illustrations, we've been able to do justice to them. So please, in case you have any question on this, clarifications, or even in case you need me to send the class note to you, please do well to put this in comments section. Okay, now a quick one. I'm sure you still remember this question. This question, I'm going to be solving this question with us in the next recording. Then I will put it here, and then we are going to be looking at how to solve this question. With this, we'll learn how to go about depreciation, how to get the relevant figures at the year end, and then the final destinations regarding those relevant figures. The one that will go to the statement of profit or loss, statement of financial position, and all of that. And then the terminologies, we are going to be explaining all of these bits and pieces. Okay, at this point, I need to thank you for your time. But if you have found this video useful, kindly follow the page, like the video, subscribe, and share it with others. Your support is greatly appreciated. And in case you want to contact me, I have my details there. The name is Ayorinde Temitope. And then the email address is ayorinde5097@gmail.com. The WhatsApp number is +234 803 385 1555. Thank you so much for watching this video. Bye.